Good evening, everybody. All right, a major change today. We could see the Dow had a wedge formation that was compressing. Now we've broken down through the bottom part of that wedge. So that would imply there's going to be some more downside. When you have a consolidation sideways wedge, when they break it down, that's usually the direction they're going to move in. The NASDAQ. The NASDAQ, we could see, was in a good uptrend as long as it stayed above the T-line. They changed that. Now we've got to see whether this kind of a trend channel will stay in progress, or if they breach the 50, they could take this all the way back down into this area, which would coincide with coming back down to the 200-day moving average. So things are looking soggy again. Let's see, real quick over on the future side, we've been short wheat. See the big berry Shirami sagging, closed below the T-line, now doing quite well to the downside. Same scenario with hogs. First of all, we could see which direction things were moving. And we could see that they couldn't get back up above the T-line here or here. Still moving in the right direction on the short side. Other things like crude oil, just nothing there. Wouldn't be long or short. Gold, nothing there. Wouldn't be long or short. Well, the dollar, no, not going anywhere. So this is the nice thing about trading futures, is probably about out of the approximate 20 different things that you could trade, whether it's the currencies, the meats, the grains, the sauce. At any given time, you may only have one or two charts that really look good to trade, so it's not like you're having to go through a whole cultivation process or scanning process. Those 30 charts, you're going to be able to find the best 2 or 3 charts within minutes, and then more than likely the ones that are trading well right now, they will still trade well for a while the rest of them are still trading sideways until they develop I forget what I was saying. No, until those charts start becoming a good chart. Is there a link we get for these? I had to look through some old remails. Yeah, they're available. Okay, let's take a gander at what was happening today based upon somebody was asking today, do we get out of OCLU? And the answer is, have we seen a sell signal? Not really. It's not a dark cloud. It's not anything. It's just a down day and an uptrend. Where's your? You're in a fry pan bottom. So what's the criteria for staying long? You stay long as it stays above the or doesn't close below the T line. Cato is a good example of why patterns work with much better results, even if the market in general has had the rug pulled out from underneath it. It's because candlestick patterns are a buildup of investor sentiment. They aren't created in one day, or they aren't influenced by one day decision making. Goose, same scenario. Notice what this one did today. Came all the way back to the T-line and bounced back up. And what do we still have here? A fry pan bottom. This is still a viable buy, especially if it comes up through these highs over the next couple of days. ADAP, same scenario. Fry pan bottom breakout. It was flat today with the market down 330 points. And a speculative one on Friday. The big fry pan bottom, smaller fry pan bottom, and long fin, LFIN. And again, observe the obvious. Look what this one did today when the market was selling off. Rigid, thank you. I'll keep an eye out for that. So a few others that were still trading above the T-line. WAIR still holding up well. ESIO still holding up well. Again, a fry pan bottom type setup. On the short side, Land's End starting to get a little bit iffy here. Notice a long-legged doji in the oversold area. Another doji day. So this would probably put us in a position with the stochastics in the oversold area and a couple of dojis. But if it opened positive tomorrow, that tells us this is the area they are starting to this is where they're starting to buy on any positive trading from here. You can go ahead and start covering your short position. Do you not recommend setting stop losses since most of them seem to bounce off the T-line? You not recommend setting stop losses since most of them seem to bounce off the T-line? You not recommend. I don't know how. I usually recommend that you want to stay long until you see a candlestick sell signal and a close below the T-line. May not have been here or here, but this one told us definitely they weren't coming up above the T-line. Yes, and you always want to have a safety stop somewhere. So let's say I was short this one. Where would I put a safety stop? Just above today's high. Because if it came up through there real quick, I want to be out right away. Hot, same scenario. You can see that it failed here at the 50. You see the close below the T-line. So if you're going short, right today, if you didn't close it out, you get ready to close this out on positive trading tomorrow. You've got a doji, almost a doji bullish flutter kicker setup. So if it opens positive, showing you the strength is still in this one, you close out the short position. And we were also short this one, which was stronger than bear's breath on a day like today. But this signal right here is relevant. So this one we're hanging on to as a short as long as it doesn't close above the T-line. Because that big sell signal usually is an indication there's going to be some strong selling like we see in TISI. Things like Square staying above the T-line. So at this point, I would use the just below the T-line as my stop. Why is that? Because we've got doji, hanging man, doji. If they started trading back below the T-line, what would that tell us about the direction they're taking it? They're obviously heading south after the dojis. And Twitter. This is kind of a common chart pattern that we're seeing. Notice how the trajectory started pretty much slowing down, and it closed below the T-line today. It traded well below the T-line most of the day. So we close this one out. Does that mean it's not going to continue its uptrend? It could. It's just not going to be a very strong one. There's probably better places. At this point, the stochastics right here, do we know whether it's going to go up, down, or sideways? There's nothing to give us any probabilities at this point other than you've got a doji sitting right on the T-line, making it very simple as far as evaluating which way it's going to go tomorrow. Chem, same type of example. Shooting star, doji, starting to see some selling, closed right on the T-line. And it was trading below, so this makes it very simple. If it opens lower tomorrow, they aren't taking this up. Close it out. This is what this is obviously telling you, is that the sellers are starting to take control. Same scenario here on ERII. There's our evening star signal. Then notice what's happened since then. Nothing to show any buying or selling. So we're in the overbought area after a strong price move. Don't know whether they're buying or selling. We're still above the T-line, but we can see there's no direction here. What's our most logical strategy? It opens flat tomorrow. You close it out. You can always buy back at 9:05, telling you that's the direction they're planning to take it on a J-hook. But right now, once again, we don't know this direction, or this direction. So if we're looking at a candlestick chart that's supposed to give us a high probability indication of what's going on in investor sentiment, and we look at it and can't figure out what that is, then get out of the trade. Go on to something. There's plenty of other trades where you're going to get much better better probabilities. So ACRS was recommended as a short because if it opened lower today, what would that be forming? A bearish doji sandwich. What would it be telling us about our support level? That the support level has pretty much disappeared. What was the signal? A huge bearish engulfing signal. Do you ever adjust your minimum average daily volume preference because of a change in market conditions or direction? No. My universe stays the same. Usually I'm looking for more volume in short positions because you're going to have bigger volume for most brokerage firms to have the possibility of that stock being in somebody's margin account that you can borrow it so you can short it to somebody. But if the markets go flat and the volume goes flat, what's that telling you? That you probably shouldn't be trading anything because the market's flat and the volume's gone flat. So just keep your trading universe the same all the time. And with that, there's never been a time that I can remember where you didn't have at least 3, 5, 10, 15, 20 good trades on any given day. Now, there may be times when the market looks something like this. You don't know which way the market's going and it's not producing any good trades. Sit for a few days. Take a rest. There's always going to be, at some point, things turn around and start showing you good signals and patterns again. Roku, very simple. Big gap down. Notice they've never been able to get back up above the T-line. You just stay short. Let's see, while we're here, some of the biggies. Tesla. You just stay short if you're short. There was kind of an implied support level right in here. You can see when it opened lower today, that support level was not going to act as support anymore. Apple, spinning top right on the T-line. Told you which way they were going when they opened it lower today. Amazon opened lower below the T-line. Told you the prospects were much greater probabilities that things are going to be heading lower. NVIDIA, same scenario. Labu. Anytime you're below the T-line, the probabilities become tremendously greater that things are going to head lower. Same scenario on the bullish side. When you're above the T-line, the prospects are much greater that you're going to head higher. So that's the simple analysis for recommending a PTQ. You had a gap up, fry pan bottom. You're above the T-line. It didn't execute today. But if it opens positive tomorrow, what's it telling us? The fry pan bottom's still working. They consolidated nicely, but the buyers are still in control. Same scenario on something like SNDX. Notice where they did the doji. So if they open this positive tomorrow, what's it kind of tell you? That this little consolidation area is over. Where would you set your stop loss for PETQ? If this opened positive tomorrow, what should we be expecting with a high degree of probability that we're heading positive? What's your stop right here at the open of today? If it came back down through there, was going the wrong direction, close it out. We're going to be doing a session on day trading tomorrow. So where are we right in here? We're right in a breakout area. What do we know about our doji? The doji rule. If it opens positive tomorrow, which direction is it going? This direction. So as a day trade, you could be watching this, and that's probably going to be a function of, if they open this positive tomorrow, it's probably because the market is opening positive and this one's opening positive, breaking you out into new territory. You could be buying immediately, because now what's your risk-reward factor? Positive open means you could have another day like this. A doji opens positive and immediately starts selling off, you close it out. So you've got very small stop loss risk, but very high probability profit potential. Yes, NKTR, you're still above the T line. It would be a hanging man if you were in the overbought area, and the stochastics are still heading up. Now, if it did a hanging man more like that, yes, then you begin to worry. But right now, it's what you're coming out of. You're still on a fry pan bottom. So what's your simple rule of a fry pan bottom? You stay long until you see a sell signal and a close below the T line. CSIQ, there's your best friend, doji gap up. Like, there's kind of your doji gap up, one that could be bought. So this was yesterday when you did the doji, when it started trading positive. What did that tell you? It's going to probably move positive. Oh, where are we? Coming out of the slow curve, big breakout, looks like a J-hook pattern with a piercing signal set up. Remember, your piercing signal has two aspects. One, it opened below any of the trading, not just the body, any of the trading of the previous day. Oh, that's just to find how to do. I just lost all the text. It's back. Then it has to close more than halfway up this candle. And that halfway point is very important. It tells you the bulls are back in control. In a situation like square, if it violates the T-line during the day, are you stopped out at that time, or do you re-enter it if it comes back up through the T-line? On something like square, if they have enough strength to take it down through the T-line tomorrow, sometime during the day, I'd stop out. Because this is already telling me things are getting a little bit iffy. Now, if it opens here and comes down and stops out, what's the worst case scenario? If it turns around and comes back up and looks like it's closing back up above the T-line, you can always buy back. Must the piercing signal be in an oversold position? It should be. But if it's the beginning of a pattern, like a J-hook pattern, you take it for what it's worth. And it's a piercing signal that might be starting your next uptrend on a pattern. RNDT. RTNT. Would you have sold since it gapped? Well, look how much time you had from the time it gapped down. So if I had sold this one, it'd probably been more here because you had your doji, then it gapped down. Where do you think it would probably be going to? Down here. If you held on to this, or now let's say you were stopped out. Now you saw your piercing signal. So more than likely, if I can do this correctly, if this is your open, probably by the time, that's your 10-minute chart. That's your 5-minute chart. This looks like it. In less than 1 minute, they bobbled it down and started bringing it back up. So what does the visuals of your candlestick charts tell you? Well, they gapped it down, probably even before you could think about and start getting ready to close it out. They're already starting to trade green. And when you see that green going on, what's that tell you immediately? That after they open it, they're buying. So if they're buying, then what becomes your next strategy? You put your sell stop down here where it opened, because if they come up and then take it back down, that means they're selling it off. Okay, well now we're way out on that one. Let's see, we got a bunch to look at here. Did we do this one? AMSC, yep. So we're down there. Okay, so here's your message. Your message is a gap up. And they start taking profits. Ask that, Jack. We'll get to it. So what are we looking for on a message? Well, we know the message is they got in with great strength and there was profit taking. So what do we look for after a message? We're looking to see when the profit taking is over and the buying starts. That's when you can start buying. So if you see something like this, where they've gapped it up, what you're looking for, remember, they gapped this up. Start watching for the buying, telling you the profit taking is over. Let's see, I can't read my own handwriting. There's kind of your, let's do your profit taking. The profit taking is over. The message was they gapped this up. JP Morgan. If you're trading off an hourly chart, then you can use the hourly chart. But you don't want to be picking a chart just to find something to convince yourself. If I was trading this one, what's my daily chart tell me? Not anything real spectacular. If you wanted to look at this as, yeah, that you might have a head and shoulders, but you might have already hit support here. So, depends on what time frame you want to be trading. If I'm trading this as a daily or a swing trade, you know, I already know that if this opens lower, you can, especially if it doesn't support at the 50, you can be shorting it. HTGM, nice slow steady uptrend. Now this is where the benefit of analyzing each individual signal gives you, the candlestick investor, a great advantage. Started selling off. How decisive was it? Doji, indecisive. Doji, indecisive. Indecisive. Hammer, indecisive. Indecisive. So you can see the pullback is very indecisive. You can see the uptrends are very strong. Somebody was asking about Crone today. Not quite a kicker signal. I don't know why this is all the chart they're giving us. But it probably tells you there's going to be upside. You just have to watch to see when the first sell signal comes into play. Because the kicker signal, as we see in KEYW, is a very strong indicator, especially if you start adding other elements like, look where the kicker signal occurred, off the 200 and the 34. Closed above the T-line. What do you have? Kind of a scoop pattern. But that is your number one reference right there, is a very strong reversal signal. So here's another one in that same area, solar. Not in the same area. Oh, I skipped one. That's got a nice fry pan bottom. Notice where you're sitting as far as a day trade setup. Hold on, right in day trade. What do we know about our simple doji rule? If it opens positive, it's going to trade positive. Look what we're coming out of, a fry pan bottom. I don't know what this thing is. If it opens positive, what's it telling us about the 50? 50 is not acting as resistance. What's your risk reward? You can be buying immediately because you know you'll have at least this type of move, maybe even greater. And then if it turns around and closes back below this level, you're back out of the trade. So very, very small stop loss, still a good percentage, high probability upside. That was supposed to be, based upon, again, the best friend in CSIQ. HIBB, there's your belt hold, bullish confirmation. You can still be buying this one. Anytime you see that belt hold, it tells you they've wiped out sellers. They're more than likely heading in an upward direction because there's not as many sellers in the way anymore. AGEN, belt hold. If this opens positive tomorrow, what's it telling you? It's moving in the direction how they opened after the doji, trying to break out through this downtrending channel with a belt hold, telling you wave 1 and wave 3 is now just starting. What was the belt hold a couple back? Oh man, I don't know. There's the belt hold. Gapped way down below the previous open and previous trading and came back up. Kind of a belt hold right here, gapped out of the trading range, back up into the trading range. SUPN. So the other week we did a session on finding or taking a look at about the 8 or 9 different trading strategies you could use with candlesticks that produce high probability results. The belt hold might be one of those that you use. And the reason you want to break it down into just using 2 or 3 different trading strategies so that you know exactly what should result after whatever trading strategy you're using. So on a belt hold, we know we should be trading positive because they took out the sellers. That means we stay long until we see a sell signal. And you start getting, mastering or become an expert of what the price movement should do after the belt hold signal. Overstock was one that gapped down in the oversold area right off the 200 and started coming back up. So what's the logical target? Probably going to see a bounce back up to the T-line. There was another one. I was trying to find the other one to go with this one. There was another one somewhere that did the same thing, gapped down right to the T-line. SPAR, you can see, is doing a J-hook type pattern, coming out of a big fry pan bottom type setup. MANT, bullish engulfing right on the 50-day moving average. So here's another trading strategy that you can utilize. If you see a bullish engulfing in the oversold area, smack dab off the 50, logically, where do you think everybody is buying as soon as it was supporting on the 50? We see it immediately. After a message, do you enter after any positive trading or wait for price to move above the open? You want to see it stay above the open or the close of the message. So you want to see it trading above where that last trade on the that big bullish candle. Here's ORA, Morningstar signal after flat trading. What is that? That's that little mini scoop pattern. Look where it closed, right on the T-line. So if it opens positive tomorrow, what's it telling you? Telling you it's confirming the Morningstar signal, number one. Number two, it's telling you that the T-line's not acting as a resistance. You want to be buying immediately. Hang on to your individual ones until I tell Jim to do the double line. PPC, which was a short a while ago, notice when it did the bullish Harami gap up. What's the message or what's the implication here? You're in an uptrend after that gap up. Kind of a fry pan bottom. Where's your first likely target? Up here at the 50. And then you see what your first see what it does at the first target. OLED, failure at the T-line. You can be shorting this one on weakness. ABEO, sell signals. Now your bearish doji sandwich. First target right here, but possibly bringing you all the way back down here. Oh, first resistance, the gap, TC, I don't know which chart you're referring to. FTR, slow curve, dumpling top. You can short this one on weakness. Because if it opens lower, what's it telling you about this support level? It's not there. You might have another big move to the downside. Smart Sand. This one you can see where it did break down on the slow curve and did a doji sandwich. You stay short on this one until you see a buy signal. EXAS. Yeah, there's your hanging man. Almost a bearish engulfing. Looked like a bearish engulfing. Doji. Confirmation. Doji. Slam. Where do you think the next target is? Here or getting back down into the trading range? Oh, I don't know. Overstock. No gap that I can see. ATR. Lower open. More than likely bringing you to the 50. But here's a very simple trading strategy that works effectively well. Uptrend, pullback. If you're buying, you don't see a confirmed sell signal, you stay long. Pulls back. Comes back up. If you see a confirmed sell signal, before it gets to this level, you get out immediately. Because that tells you they aren't going to a new high. You're at least now probably sideways. So if you see a sell signal in an uptrend and they can't get to the previous high, the uptrend is over. GPOR, left-right combo, failure right smack at the 50. Close below the T-line, bearish doji sandwich. There's your next target, back down at least to the support level. Big bearish engulfing. You can start shorting this because if they break through all these support levels, you've got the potential of some big downside. Okay, so right now we've got to assume that investor sentiment has changed once it broke through this lower end of the downtrending channel. So you probably want to be doing some short setups. Netflix, I put on a bearish put spread. I forget which one it was, with the idea that they could at least come back down here and test this level. And I'm forgetting. We started buying the calls on this one because not only do you have a fry pan bottom, or a big fry pan bottom, but if it got moving, notice the magnitude of the movement. Today it was up 289, not a big day. But if this gets moving, it could move up to 60 very quickly and bounce back up to 80 very quickly. So you got some big price movement there based upon its previous history over here. Okay, so before I forget, what was I going to say? That's just great. Oh, tomorrow we're going to do kind of day trading setups, high probability strategies for day trading. Starting on the Wednesdays of next month, we're going to be going through, like we did on the 12 major signals, we're going to start going through the different patterns every Wednesday night. Probably starting off with a slow curve and the fry pan bottom. We'll do that every Wednesday night for the month of April. On April 7th, Now, let me make sure. On April 21st, we're going to be doing a 4-hour training session on the emotions, fighting your fears. That one is a much more subjective question and answer session where we go through and show how candlestick signals and patterns put you in situations where you can take the emotions out of your trading. If you've done the other training, probably even if you haven't done the other training, you probably want to do that because that's part of the investment training that nobody ever provides of what do you do to get rid of your own phobia, or that's the right word, phobias, so that you don't have your emotions kind of screwing up your analysis. I think, let me take a look here, just so you can plan ahead a little bit. On May 5th, we'll be doing the 2-day full training. That's the bread and butter training, going through the 12 major signals, all the signals and pattern, or all the patterns, your entry and exit strategies, your stop losses, using trend analysis, using the gaps, going right from start to finish. I'm going to be talking with Bill Johnson tomorrow. Because we're going to be, as you've seen, we're going to start, hitting a lot more option trading. We get a lot of interest in option trading, especially with candlestick signals and patterns, when you know the probabilities are greatly in your favor. But if you can figure out, or just simply put the right trading strategy with the right signal and pattern, your correct trade ratio and your profitability will expand dramatically. So, not necessarily saying you're going to hit a home run, which candlestick signals put you in situations where the hitting a home run is much better, but even your small good trades become very profitable based upon putting the appropriate put strategy or put spread strategy, anything like that on. Before I forgot, that's about right. Is the day trading setup class 2 hours? No, it's going to be about an hour tomorrow night. Frank, that's where we will step across that little threshold of giving you much more visual analysis capability so that you're not uncertain, that you kind of wash out everything that would create any uncertainty in your decision making. So we're going to kind of keep rolling through this to not only get your emotions trading correctly, but making sure that you're on May 5th, yes, 2 days. That's the 5th and the 6th. And then I'll get with Bill Johnson tomorrow. That's what I was saying, is we're going to be doing a lot more with option strategies. Again, we want to have everybody educated in what they're looking at so that you're not sitting there an hour at night trying to figure out what to do once you've identified the correct trade strategy. You want to know whether you should be putting on a spread or a credit spread. You don't want to be sitting there all night. You want to be pretty much instantly known. It's just like, I guess, Army training, where you go through the same maneuvers over and over so that when you see it, you know it, and you can move on it immediately without having to hem and haul, and that might be too late. Let's see, I know there was something else I was supposed to announce, but I can't think of what it is. So with that, Jim, go ahead and do the double line. Oh, Jim, there you go. All right. And then 3.8 seconds, do the next double line. That may have been too quick. Okay. We did Amazon, all right. BIIB, get ready to short this one on weakness. Look at all the lines on here. Especially if they break down through this level. Wave 1, Wave 2. Notice your shooting star gap down starting Wave 3. Goldman, nothing of any great consequence. If you're short, stay short. But as you can see, you're kind of just in a sideways channel on this one. Barnes & Noble, fry pan bottom, as long as it stays above the T line. Donley, you have a bearish Harami shooting star in the overbought area. If it opens lower tomorrow, close out, take your profits. It's more than likely coming back to test the T-line. T-Doc, stay short as long as it stays below the T-line. AQMS, nothing. Wouldn't be long or short until it breaks out through this level. I'd rather pay $333 for it knowing that it broke out to the upside. DXC, you can just stay long, nice steady uptrend. RF. Nothing of great magnitude here. You shouldn't be in it until it closes back up above the T-line. Children's Palace, another one, not any real powerful move. Matter of fact, I'd be more apt to be ready to go short if it opens lower tomorrow and trades back below the T-line. AMTD, nothing here either. And you'll know what to do exactly on a positive or lower open tomorrow after today's doji right on the T-line. AUPH has to get up through the 200. It's got the best friend gap up. If you're long, you can stay long. If you're looking to go long, I'd probably want to wait for it to come up through today's high. CLMT, be ready to short this one on weakness. Navagold, you can be buying this one. Gold isn't really doing too much of anything. So some of these gold stocks are starting to move for some reason. Here's Barrick's gold. FORM, you can get ready to buy this one on positive trading. LabD, still coming up, but nothing decisive. If you're going to buy this one, this is the short fund. You want to buy it if it comes up through the 50. Walmart, nothing. Wouldn't be long or short this one. Did today's action negate the Morning Star? Yes, it did. So if this was the candle, that told you the bulls were in control, when they traded it back below this level, the T-line and the 200, who's in control? The bears are still in control. PayPal. That looks like if it opens lower and trades below the 50, you short it, because now you have a bearish scoop pattern. General Mills, you can stay short. The problem is General Mills is one of your quintessential institutional traders. It's going to be just a slow drift, not a whole lot of movement in it. But if you're short, you stay short. AMGN, you can short this one on weakness. It'd be IBVAVEO. Definitely, boy. If you bought it today, you can stay long. You definitely need to see it get through this level right here. Let's see, we did those. Cree, nothing. I'd be out of this. After that big shooting star, I'd have closed it out today with it still doing nothing. You can always buy back if it comes up through this level. So I'd rather pay $43.35 for it knowing that it moved in this direction. Microsoft, nothing. This one's just a non-mover. It's an institutional trader, obviously, probably the institutional trader. I'd be someplace else. You're just not going to make a lot of money. Micron, stay long as it stays above the T-line. Humana, which way is this one moving? Nowhere. Go to someplace else. Then we look at CNAT today. Stay short if you're short. GSUM, stay short. KBR, you can stay long on this one. Just make sure it gets up through the 200. And STX, another one, you stay long, but it needs to keep this slow trajectory up. So you want to see it trade positive. If it trades flat tomorrow, you close it out and then just get ready to buy it back up through that level. Gibson, stay short. Did I do that one already? Apparently. I know I hate when cursors run off like that. American Express. Another one that I wouldn't be long or short. You can see the direction of this one, which is absolutely nowhere. NKTR, you can stay above the T line. Square, you stay long as it stays above the T line. PTI, what happened here? PTI. Oh boy. If you're long, you can stay long. But I'd probably put a sell stop below yesterday's low, because if it came down through there, the sellers are still pushing it back down to the T line. VCell, another one that if it opens lower tomorrow, you close it out. TMUS, I would suspect it's coming back at least to test the moving averages anywhere from the 50 down to the 200. If you're going to do anything, you should be out of this one. This would have been a logical place to put your sell stop. back below the T-line because it needed to open positive and trade positive. If it went in this direction, you knew it was still going in the wrong direction if you were long. I don't know what's happening here. ABBV. Which direction is this heading? Sideways. If it opens lower, you can be going short, because that means this little wedge type formation is being breached. Oops, you already had that. You were ahead of me. Wayfair. If this opens lower tomorrow, yes, you can short this one. You can see where it failed. Hanging Man, bearish engulfing right at the 50. I think we did this one. AMGN. You can be shorting this one on weakness. Walmart, we did. CEIX. I'd be someplace else. Skechers. What the heck is going on here? Skechers, you're ready to go short on weakness on this one. Kind of a double top. KRE, be ready to short this one, but your support level is going to be right here at the 50, obviously. So you're in a slow uptrend. Wouldn't really get excited about this one way or the other. SIG, boy, with it closing above the high of the doji of the other day, I would have closed it out if you're short. If it opens positive, at least expect a bounce back up toward the T-line area. DDD failed right here at the 200 with a shooting star doji. I'd be ready to short this one on weakness with the anticipation they're coming back to test this area and or this little gap area. Facebook got hit hard, closed right on the 50. If it opens lower, you can be shorting it. It means they're still selling it. Gypsum, stay short. We did those. All right. Gel, one that you can get ready to go short. Notice the evening star right at the 34, then it closed back below the T-line. A weaker open tomorrow will put you wave 1, wave 2, going into wave 3. Just make sure your volume is good. Oh, if you're watching the Fox Financial News or advertising Strange Inheritances, which is some guy that has, I think they said there were 60,000 pieces of he's carved as far as a circus. Try to get this. VVV, Valvoline, you stay short. Failure right here at the 200. I'm sorry, right at the 50. But if you ever get to Vermont, there's the Shelburne Museum. And there's one building up there that's shaped like a big horseshoe. And it is a guy carved, I forget how many hundreds, if not thousands of figurines of horses, and they're pulling the cages with animals in it, the clowns, just hundreds of them. So it's about 100 yards long. So it's very interesting. So just brought that up because I seen the one that he did of the circus. Humana, I think Humana Industrial. I don't know. Yes, just flat. SPLK. Doji, right on the T-line. It has to open positive to stay long. We did Tesla. Tesla, you stay short. It's still not your resilient chart, but right now it's heading down. UVXY. They're still in a wedge. I watched to see which direction they break out of the wedge. FAS, still same scenario. If you're long, it needs to get up through the 50, which is kind of coinciding with this downtrending channel. FTK has to open positive and trade positive to stay in it. You can see that it's supporting right here on the 200. Jen, you can be buying this one. Just make sure your volume's big for a $1.50 stock. Apple, you can anticipate this coming down to test the 50-day moving average. This is sort of an emotions issue, and I know you have addressed it many times before, but again, we have looked at your 20, 30 potential setups, not to mention all the other requests. How do you choose and narrow down your next day trading day? Rob, in my case, if I've got 20, I can real quick to see which ones would be the best. So let's say I saw something like this, where it was a Doji Harami gap up. Well, that's your best friend. That would be up at the top of my list of one I want to go after. So that goes back to the process of, instead of trying to learn 8, 9, 10, 15 different trading signals and patterns and strategies, learn 2, 3, 4 very well. You're always going to have more trades than you're ever going to be able to handle. You don't have to know every single trade or every single trade setup. Learn a few of them. So now, if you're going through those 15 or 20 that look good, but you're only interested in the belt holds and the best friend and the fry pan bottom breakout, now you've narrowed it down to the ones that you really want to analyze. Now you may only have 2, 3, or 4 that you really have to look at. Or maybe just one out of that. EMKR, another one you can buy on positive trading coming up through the 50. Oh, is that it, Jay? Okay. I'll take a look at that. Go to the Shelburne Museum. It's an outdoor museum. I could spend a whole session just telling you all the things they have. They got a big barn with all the old sleighs and all the old carriages. Just a very fun place to spend the full day. They bring in different houses from all over the Northeast. One that may have been built in 1670, another one in 1710, another one in 1840, and it's all decorated and filled out just like it was back at that time period. Boyd, nothing yet. If I was short, I'd get ready to cover it on positive trading tomorrow. Otherwise, on a lower open, I'd stay short. J. Bill, get ready. If you're long, if it opens lower, you take your profits. You can always buy it back when it comes back up through the close of that first big candle. Do you still apply the close below the T-line when using the 10-minute chart too? Yes. So here would have been another case with, if it moved that far away from the T-line, I would have flipped to my 10-minute chart today to see if it was coming back down through. You use the same thing, yes. That if you're that far away from the T-line, go to your 10-minute chart. Now, if your 10-minute chart shows that you have a sell signal and you're even too far away from the T-line on your 10-minute chart, you get ready to close it out on the first signs of selling, knowing that at least on your 10-minute chart it's going to come back and test the T-line. But that parameter is put into place if you see on your daily chart that you're way, way too far away from the T-line. Jay, yes, it's just a fun place, especially if you get a nice warm afternoon. You can spend the whole day there. They also have the steamship. I guess not the steamship, but the side paddle wheel. Ticonderoga, which used to go, it was like a cabin cruiser, commercial cabin cruiser that would go from one end of Lake Champlain to the other. So the museum is, I think, about 12 miles east of the lake. So they've got film footage of how they had to build a separate railroad from the edge of the lake to the museum to move that boat over. But that's an interesting exhibit. ISRG, nothing. You can see how it started running out of steam right here. Then you had your left-right combo, which would have been you would have sold right there. Anytime you see a bearish left-right combo in the overbought condition, close it out immediately. Anyways, you could be going short if it comes down through the 50. McDonald's, you got a failure right here at the 200, so you can be shorting this one if it opens lower tomorrow. US, you probably want to close, or should have closed this one out today. Wouldn't have been able to short it because it's below $5. It resembles a belt hold, but to say it was a belt hold, what it needs to take out on the top, yesterday's high? No. A belt hold, you will notice. That's just a little bit lower open. You're still in the trading range. A belt hold is something that you can see has moved significantly, and it's not a percentage, it's not a numeric. It's very visual. Here's your trading range. It opened way down here and then came back into the trading range. AKCA still moving in the right direction. You can see the scoop type pattern. You can see the best friend breakout. You stay long until you see a sell signal. The 220-foot steamboat Ticonderoga is at the museum. Yep, and that's a fun thing to go through. Shelburne, Vermont, which I think is 20 miles south of Burlington. It is funded by the Domino's Sugar family. Yeah, I could go on all day about especially the barn that has all the wagons and sleighs, and I could spend days in there just sitting in those things. Okay. Oops, skipped you a little bit over time. All right, everybody. Okay, so mark your calendars. Forget what dates they were. Oh, Fighting Your Emotions, April 21st. That's the first big one coming up. This doesn't seem like we're heading into April already. All right, everybody, have a good evening. No, I haven't been to that one, Gwen. I know there is a car museum somewhere between here and Dearborn. So I want to see that. It's got some of the old, very old cars in it. Anyways, all right, everybody, have a good evening. We'll see you bright and early in the morning. We'll see you then.